Hey everyone, Cathie Investor back on our earnings video for today. So let's go over UiPath's earnings report. The stock is up around 12 to 13% at the time of making this video. The company reported a double beat, which means beat on the top and bottom line. Now the numbers actually keep improving and keep looking extremely good for this company. We've looked at a lot of software companies. We looked at a lot of big tech companies, darlings from the pandemic period that have gone from high growth companies to just single digit growth companies. With regards to UiPath, actually growth is still quite nice. Now they're also operating in an industry in a market that is expected to continue to expand and to grow. That market is called Robot Process Automation, or RPA. In 2022, that market was valued at $2.3 billion and growing at a CAGR of 39.9% from 2023 to 2032, which then will be valued at $66 billion. And as you will see throughout this video, UiPath is still a small player. This is still early days for them in this big and growing market. Now, for those that are interested, UiPath sits at number 4 in Cathie's ARK Invest portfolio. This is the combined portfolios, number 4, so a high conviction pick for them. Then looking at the major overview for UiPath, so we've got here PE versus the mean. Of course, this is in the last couple of years since they went public. So the lowest one was at 36.6 times, still not that cheap, but right now we are sitting at 48.4 times. The mean is 83.1 times. If you look at shares outstanding, that has increased 9% since it went public. With regards to sales versus the estimate, same with EPS. With regards to estimates, they beat each and every time, which could mean that they always sandbag or they're just performing and executing extremely well. Now, before I jump into this report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I want to start with a couple of comments here. So I'm pleased with our strong third quarter results, with ARR growing 24% year over year to $1.37 billion, driven by the team's execution and the transformational results we deliver. My conversation with customers and partners validate the strategic role enterprise automation plays in digital transformation, and I'm excited about the investments we continue to make in AI to further extend our market leadership. As for the other co-founder and co-CEO, our unwavering commitment to understanding the needs of our customers is key to our success. In our most recent platform release, we delivered scores of new capabilities that seamlessly translate the potential of AI into tangible action, accelerate productivity, spark innovation, and drive business outcomes for our customers. Now, of course, this company has a couple of tailwinds: the growing market that they're playing in, AI revolution or evolution, and then just the fact that their margins as a business are already extremely high, which of course is great for free cash flow generation for years and years to come. Now, jumping into the report here, we can see that while they're still scaling to large customers, which of course makes a lot of sense. So customers with over 100,000 ARR sits at 1,974, with customers over a million in ARR, 264, was a jump from 201 same quarter a year ago. Of course, when talking about enterprises, when talking about legacy, they are playing in a lot of big verticals here. So public sector, healthcare, financial services, manufacturing, all of those will experience lots of tailwinds thanks to innovations like UiPath. For example, the healthcare customer journey. So year 1, they landed with core RPA in Epic application testing. Then if you go to year 5, expansion in clinical for in-basket home care infusion service migrates to cloud, and then you have here over $250 million in savings to date. This is of course a huge selling point, right? You can show already the results, you can show how much X company, Y company is saving thanks to these automations, because you don't want to waste times on repetitive tasks if, well, a robot and AI program can do it exact the same thing and much faster. Will save you money, will save you time, will let you operate a bit freely, will let you do things that you would not have done before because you didn't have the money nor the time. Things like this, showing results like that, will definitely attract more and more customers, and especially bigger ones. And so this is the big picture right now. Since first quarter 2022 until the third quarter 2024, this is fiscal year 2024 by the way, grew at a CAGR of 35%. It's at 24% ARR growth rate year over year, $121 base net retention rate, which by the way, I believe this is one of the big reasons as well why the stock has not gone down. It's actually up 12%, is because this number usually went down and down each and every quarter. Now it remains stable. With regards to dollar net retention rate, excluding FX impact, that's a bit lower than last quarter. It sits at 123%, but overall, maybe the bleeding has stopped. As for the GAAP financial results, we now have revenue of $325.9 million, GAAP gross margins of 85%. If we look at expenses, that keeps increasing actually year over year. Besides G&A, stock-based compensation has also increased year over year, so keep that in mind. But GAAP operating loss is getting smaller. GAAP net cash provided by operating activities went from a loss of $27.3 million to now $41.9 million in this quarter. Then as for guidance for Q4, they expect revenue to come between $381 and $386 million. I believe the estimates, the consensus number was 382 at the midpoint, so a little beat there. And as we've seen before, they usually beat the market's estimates. As for ARR, that will come in between $1.45 to $1.455 billion, with a non-GAAP operating income of approximately $78 million. Now looking at the charts right now, with the pre-market action, from a year ago, it's up over 100%. As you can see here, it's been making higher lows for a couple of months now. Then it broke through that resistance point, which was around $18. And now we're sitting at $22.65. Of course, previously back in June 2022, $22 was rejected a couple of times, and then, well, the rest is history. Now, of course, looking at RSI, it was already high, and now with that jump, it will be probably higher as well, which means that on the daily, we are probably going to be a bit overbought during the day, depending on, of course, Friday action. When the market opens, we're probably going to be a bit overbought. Let's see if it can stay above $22. Now, for those that wanted a bit more information, UiPath still has a market cap of above $10 billion. It's up 55% year to date. And now the analyst estimates for the coming fiscal years. For sales, they expect sales to increase 19% in fiscal year 2025 and 17.4% in fiscal year 2026, with EPS growing close to 12% in fiscal year 2025, and then a reacceleration of 32.2% in fiscal year 2026. So again, this is definitely still a growth stock. This is definitely still a company that is growing quite fast. And so getting those higher multiples in this case still makes sense. So overall, UiPath executing very, very well. I mean, the market that they're operating in is growing. The stock did what the stock did in the last couple of months. Eventually, it always reflects what the business is showing the market. And that's exactly what we're seeing right now. And that's exactly what we've been seeing for the last couple of weeks and months as well. Higher lows means that the market is starting to appreciate this company more and more. So that will be it for this video. Of course, do share your thoughts down in the comments below if you own UiPath or not. Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.